So welcome to another episode of Phillip Trading Podcast. My name is William and our speaker here today is Jose. So Jose is a multi-asset trader specialized in options, in equities, in futures, and also in currencies trading. So how have you been, Jose?
Wonderful, wonderful. To be honest, trading the markets is always lots of fun, and definitely 2022 has given volatility and everything else. So yeah, great, and cannot believe it's December already. We are about to end the year.
Good. We are very happy to have you here, okay? Because US dollar has been in the spotlight since I think in March that Federal Reserve in the United States, they start to increase the interest rate, okay? So US dollar has been really in that spotlight and has been making all other currencies weaken against the dollar, okay? So Jose, can you please share with us what are the key drivers or fundamentals that actually move the US dollar index?
Yeah, well, the US dollar is an extremely relevant currency, but in the end, it's a currency, and therefore the drivers that impact the US dollar are more or less the same drivers that would impact any other currency. So I'll start with a very key element, which is the interest rates. So most countries around the world have their own currency and they have their own central banks, and those central banks, they have the power to do what's called currency intervention. So they have decisions when it comes to changing the interest rates. And for example, we saw for many, many years, the US dollar had a very low interest rate, and therefore a lot of money was sitting in other currencies. But as throughout 2022, the interest rates have been pushed higher. Next thing you know, all those monies that were sitting into other currencies were converted to US dollar to benefit from that higher interest rate. And of course, that creates a huge movement in price to the upside on the dollar. So interest rates is a key factor impacting the currency prices. The unemployment numbers in a country is also another fundamental factor, which is key, because also when an economy is not doing well, typically unemployment numbers are poor, and the opposite is true. And when an economy is doing well, so then of course that will motivate a lot of foreign investment in that country. So again, the unemployment numbers, are key in impacting currency valuation. And I'll add two more to the list. There are many, to be honest, but I'll add two more, which is the GDP, which also talks about gross domestic product, that talks about how well or not a country is doing when it comes to their exports. And then the CPI, the Consumer Price Index, which has a lot to do with the inflation, which is an also very hot topic in 2022. One of the reasons for the interest rates to have been changed is the inflation, and therefore the CPI, and those are the key metrics from a fundamental point of view.
Okay, so sounds like, to conclude everything, the interest rate itself from the US is the key driver and also the key fundamentals. Yeah. Okay.
Absolutely.
So with the interest rate that we have been talking about, almost reaching a peak of 5%, what do you think is next for US dollar index? And is US dollar still going to be the king in the next 12 months?
Well, the US dollar index is the king and will very likely remain as the king for a long time. With my funny Chinese accent, I always joke and say the US dollar is Lao Pan. because in the end, almost 80% transactions worldwide are performed in US dollars. Most of the key commodities like gold, oil are priced in US dollar. The largest stock in the market, the largest stock market in the world is priced in US dollars, which is the New York Stock Exchange. The largest bond market in the US is also priced in US dollars. So in other words, the moment something happens to the dollar, everything worldwide is impacted. And we saw it very clearly this year in 2022, where everybody forgot the dollar is the Lao Pan. Many people, maybe they were looking at Bitcoin, nothing against Bitcoin, nothing wrong with cryptocurrencies or other assets, but at the same time, a lot of attention was put in places and people kind of forgot. It's kind of like taking your parents for granted, if you wish. You kind of forgot the power of your parents. So people kind of forgot the power of the US dollar that proves himself. So in my mind, for sure, the US dollar will continue driving everything as it's always done. And now when it comes to, what's going to happen with the US dollar, so the big difference is that when earlier this year, the dollar started making 20-year highs, 2-decade highs, right? So there was not too much to stop it from keep going higher. But as the market has been retracing 8% on the way down, 8% roughly, when you do some technical analysis on the charts, and we have specific technologies to identify on-field orders and things of that sort. So we do spot multiple price points with intense selling for the US dollar. So what I would expect, to be honest, is a great trading year ahead with the US dollar, with a lot of opportunities to buy and a lot of opportunities to short both, because the dollar will probably define price ranges up and down, with an interesting volatility levels. But I personally, as a trader, will not expect the dollar to surpass 115 anytime soon. I would expect it to go higher, go back down, go back down, go back higher, and keep ranging, because there is a lot of buying and a lot of selling below and above price based on my analysis of the markets.
Okay. So you think US dollar, the 115, we won't be able to go above it. The 115 should be the ceiling. Is that what you think?
Yeah, so like, to be specific, when I do my analysis around 113.33 to be precise, I see a lot of selling. So I will not be surprised. The dollar is currently today real time trading at 104 something. So I will not be surprised to see a nice swing of price and see the US dollar go all the way to 113, just to go back down to around 102 something. So that price range between 113 something and 102 something is the price range that I think we're going to see the US dollar go back up and down multiple times, especially into next year. Yeah, we changed the trend condition. We are not in an uptrend anymore. It's more like a very wide sideways market, which is fantastic to trade because it's wide. The tiny sideways markets are very boring, but the wide sideways markets are very profitable, when approaching trading properly.
So overall, you think that US dollar has reached its peak and is likely to go into consolidation in a very wide range.
Yes.
Cool. I think that is what the traders wants to know. They need to know what are the next direction. So sideways probably the direction to go. Okay. So just one last question for you. For new traders that are actually not familiar with the US dollar index, do you have any advice for them to start trading the US dollar index futures?
Well, yeah, definitely. First of all, to me, in all my analysis, whatever I trade, because as you said at the beginning with your very kind introduction, I am a multi-asset trader. I trade different assets. But no matter what I trade, I always have a look at the US dollar, because again, let's say you trade, you name it, you trade the euro. Well, it's a currency paired against the dollar. So you trade stocks. Let's say you trade stocks in Malaysia, right? So you trade stocks in Malaysian ringgit, but the Malaysian ringgit will be impacted by the US dollar. So no matter what, having a look at the US dollar when planning trades, no matter what you trade, is definitely recommended based on my trading style and experience. But then, because it's such a relevant market, trading the dollar itself is also a very wise decision. I see many Forex traders out there in the world that trade either spot Forex or Forex CFDs or Forex futures. And many times they focus on trading certain currencies. And many traders don't realize that trading the dollar index is really a very nice thing to do, given the relevance and the power of the market. On top of that, when it comes to trading the dollar index, there are products. For example, ICE Future Singapore has what's called the mini dollar index, which is a fairly small contract where you could trade the dollar, with, I would say a very reasonable amount of money. I think it's just a few $100s to trade one contract. I think it's $300, something like that, is the margin required to trade one contract. And next thing you know, you are exposed to the most relevant currency in the world in an exchange, which is a very properly regulated place with margin levels which are superior to many of the markets that you find out there when it comes to trading in over-the-counter products like Forex or CFDs. So very nice market to trade. The symbol for the ones of you guys out there listening that you want to go take a look, the symbol is SDS. That is the Singapore dollar index. Okay, so DX is for dollar index. Okay, so S in front is for Singapore. That's the mini contract. Okay, because there is also a big contract, but I would say that requires a bit more experience. So that would be my recommendation for a starting point for someone who wants to be exposed to the dollar.
Okay. Thank you for your sharing today, Jose. So once again, our audience here, if you are interested to find out how to trade the US dollar index futures under the Singapore ICE exchange, feel free to drop us a message via our Facebook, and one of our representatives will contact you as soon as possible. Alternative, you can also join our webinars, upcoming webinars on the 7th of December at 7:30, where Jose will share more information about the US dollar index. Okay, and I guess that is all for today, and I will see you again next time, hopefully.
Wonderful. Thank you so much, William, and everyone listening. Thank you, guys.
Thank you. Thank you. Thank you.